What's good, everybody? It's John. I'll come back at you on another video. So this video, I'm going to do a trade recap for Tuesday, July 7th, 2026. Now, if you haven't checked out my previous video before watching this, I highly recommend you check it out, right? It's the video that's going to give you the trade recap for Monday, July 6th, 2026, which would be the day before of this trade recap. Now, it's important because it has a lot of prior information going into this video, and the reason why you need to watch this video and stick around to watch the next few videos are because I'm effectively doing a trade recap for this entire week. As you can see in the bottom right, it is July 10th, which means the trading week just wrapped up. And if you're serious about learning how to trade, I highly recommend you watch the 5 videos to watch this entire week, because I'm going to give pretty much an in-depth breakdown of my strategy and break down why this was one of the perfect weeks of trading for you to learn, because you get to see the ups and downs as well as the days where you should stay away from the marketplace. And if you're looking to trade a powerful strategy, in my opinion, the most powerful strategy to exist in the market, this is the video for you, and I'm going to show you why, right? And today, with this video right here for Tuesday, July 7th, you are going to see why this is the textbook strategy, the most optimal, powerful strategy for you to trade, point blank, period, right? So going into this day, right, before we ever touch the charts, we always open up Forex Factory to see any news event. So the only filters I have are red news event folders and gray one, which are holidays or like days where the markets are closed, right? Because those are the only actual variables that make a difference for me. Now, as you can see, on Tuesday, July 7th, we don't have any news. So we're going in not expecting any massive, crazy news or anything to like, basically nothing crazy, right? This will be a normal trading day, right? So it's a normal day for you to be behind the charts. Now, when we jump in, the first thing we want to do is determine higher time frame bias. So because I'm an intraday trader and my trading hours are from 9:30 to 11, I'm an intraday trader, so I'm pretty much in and out within an hour or two, give or take, right? Obviously, if price consolidates, you might stay in a little longer, but ideally, I would like to get out in and out of a trade within an hour or two, right? That is me as an intraday trader. So because of that, my higher time frame bias is on the 1 hour time frame, because my trading window is effectively an hour and a half. So 1 hour is enough for me to determine the bias and be able to trade in alignment with that, right? Because one thing I've learned is that determining the higher time frame bias, or just the bias in general, that is 80% of the work, because that is you identifying the direction that you anticipate the market to be traveling in, and then your entry, which will be anywhere from the 1 minute to 5 minute time frame. Usually on the 1 minute time frame, you're going to be trading in alignment with that direction and effectively ride the wave, right? And so this trading day is going to be the perfect example to showcase that for you guys, right? So we are on the 1 hour time frame, and I like to have the S&P and the NAS side by side, because both pairs help me determine the bias, because both of these pairs move in alignment. So whichever pair provides me with the most recent break of structure, or the most recent market structure, that is the direction that I go with for both pairs. That is the bias that I settle with for both pairs. So if we look at the S&P first and foremost, right? If we look at the structure, we have a low here, then price went up and made this high right here. So with this high that got formed, the most recent swing low was this low right here. Now, as you can see, price trades under it. Now, it doesn't even, for me, it doesn't have to close under, it just has to trade under. Even if it goes a pip, a point under, then to me that counts as a market structure break. So as you can see, price came down and broke structure lower, and the same idea happened with NAS, right? So NAS, you see this high cleared this high, right? And the last swing point prior to this move up here was this low. Now, as you can see, price ends up going down and trading under this low right here. So to me, price is bearish, and I'm going in with a bearish bias, right? After that push lower, there was no high that was ever formed or taken, right? As you can see, price came down. There was no high that was ever formed or taken. So we are approaching this day for both pairs with a bearish bias. Now, for some of you, that might be a little bit strange, because if you watch the trade recap from yesterday, you'll notice that I took 2 losses, and I approached the day with a bearish bias as well, and price stopped me out because price kept going higher and higher, right? And so it might be strange to have the same bias if price took me out and price was bullish yesterday, right? I trade, for me, I look for the bias prior the last piece of market structure on the 1 hour time frame prior to 8:30, because 8:30, that is when the hunt begins. That is when price is engineered to target liquidity. And so because of that, right, from 8:30 onwards, price typically disrespects all market structure rules because it is now going after liquidity. So that is why I determined my structure prior to 8:30, and I've determined that structure was in fact bearish. So because structure is bearish, right, now I'm on the 15-minute time frame. So what do? Is I now look for 8:30. I find my 8:30 candle, right? So this candle right here, right, the black doji, right? This black doji is the 8:15 to 8:30 candle. So because we are bearish, we now want to mark the most recent 15-minute swing high to the left of this candle right here. And the obvious swing high is this high right here. So I'll mark it blue because this is the buy side liquidity. Now, same idea with the NAS, right? So this candle right here, this is the 8:15 to 8:30 candle, right? So if we look to the left, what's the most recent 15-minute swing high prior to that? Is this high right here. Remember, if we're bearish on price, we want to see an old high get taken. We want to see price push up to then make the high of the session. So then it can then break lower. We catch price, right? If I were to draw it out, right? We want to see price go up, 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 up. And then we want it to make an aggressive push down, leave a fair value gap so we can tap into it, and then take price lower to take these targets lower, because we are bearish. So we're expecting price to go lower, and we want to take price. We want to sell price at the very top when price is high, so then we can have so much room to ride the wave of price, right? So these were the previous 15-minute highs, and now I like to mark my targets. So this low right here, and my targets are typically in purple. This low right here is the low of the day, right? And I'll mark it here, the low of the day. And here we have London lows, right? London lows, right? So we have these targets. Now, also, you know, if you look at NAS, for example, price is pretty close to these levels, right? So one thing I like to do is I also like to go back on the higher time frame, maybe like on the hour time frame, and see, you know, what other targets exist. Because if we had to take a trade on NAS, right, these targets are very close, and I want to see if there's any potential larger swing targets. So remember, if we are bearish on price, I'm expecting price to move lower. So what are some other legitimate targets? For me, I seen this target because this is a prominent 1 hour low, and to me, I'm perfectly content with taking price to this level right here as the final low. Because if we're expecting price to be bearish, to me, this looks like one entire leg of price. And so if I'm expecting price to be bearish, then price can end up making its way down to here, to here, to here, right, to all these levels. And the same idea with NAS. If I'm expecting price to go lower, because these are such easy targets, then I can expect price to want to go to other targets right here, like a low right here, and even this low down here, right? So I'm showing you guys all of this. Now, just so you know, I end up taking the trade on the S&P. So you don't need to focus too much on the NAS, but usually when I'm trading, I have both pairs side by side. So as you notice here, right, we are now at 8:45. So as you notice, after 8:30, price came up and cleared the buy side liquidity. However, this is not a problem, right? We expect that to happen because after 8:30, price is now on the hunt. So because I'm expecting price to eventually, you know, I'm bearish on price, I want to see targets on the downside be left in place. Like I want to see after 9:30 for the low, for the targets on the downside, right? Like this target, these targets here, I want these targets to be left available so that if we take price lower, there's reasons for price to want to go low, right? Because you want it to be a high probability setup. So right now, right, S&P is the only pair to clear the liquidities, right? Obviously, this liquidity is still intact with the NAS, right? So I'm just being patient with price. So now I'm just waiting to see what happens with 9:30. So remember, it's still not 9:30 yet, but as you can see, this is not necessarily the best sign because you want those targets to remain in place. You don't want price to go down and take the targets because then there's less reason for price to want to go lower if we're bearish, right? So these are the details that I'm noticing as I'm trading to help me determine which pair is more enticing to trade, like which pair is going to be a higher probability for me to trade, right? So now we're approaching 9:30, and as you can see, right, with the 9:30 candle, right, for S&P, you're seeing an aggressive push up. Now, it's not necessarily ideal that price took out these little lows, but these are very minor, right? This is a much more major low because it's like on its own by itself, and it's also normal after 9:30 for there to be volatility, right? For there to be a wick like this. But what's most important is that a major low was not taken. And as you can see, right, price aggressively pushed up and cleared this high. So now price has made the high of the session, which is what you want to see. In the case with NAS, right, you see that NAS cleared this low and, you know, dug deeper into the liquidity. So trading NAS is less attractive for me, right? Like my attention is mostly on the S&P right now because I want the sell side targets to remain intact. So now at this point, what I'm looking for is a bearish fair value gap. And, you know, if you pay attention to NAS, right, NAS, of course, cleared this and made the high of the session, whereas, sorry, S&P did that. Whereas NAS, if you look at NAS, NAS is over here and NAS never cleared this buy side liquidity. So looking at both of these pairs side by side, there's nothing for me to do in NAS because the very first step of my trading after I determine the bias and mark the liquidity is for price to take out the liquidity pool, to purge it, and NAS didn't and never does, right, on this trading day. So there's nothing for me to do with NAS. So as a result, I'm not even paying attention to it anymore, right? And it doesn't ever get cleared. So just to save you guys time so we can focus on the pair that I'm actually trading, right? So because S&P did that, now I'm focused on the S&P. So as you see, right, price came up, cleared this, made the high of the session, right? This is clearly the high, cleared our liquidity here, right? And then price broke down and it left what? A absolutely massive bearish fair value gap. So these are one of the gaps in the marketplace where you just can't miss it because of its size, right? So this is what we want to see. We want to see liquidity get taken, and then we want to see it leave a gap moving in the direction that we want to take it. So as a result, you have your fair value gap right here. You put your stop loss above the high, or like at least at the high, right? And where are you targeting? You're targeting all of these levels, right? You have a low here, you have the other low here. If we go to the 5-minute time frame, you have the low here and the low here, right? So to me, my final target is going to be down here because I'm bearish on price. So this is the beauty with this strategy. The beauty with the strategy is that you can take a sniper entry on the 1-minute time frame and then potentially swing it all the way down and just take partials along the way and just have a tiny runner, right? So then the tiny runner can give you a big win, and then you can also be aggressive as you take profit along the way. And it makes sense because you're trading in alignment with higher time frame bias, because higher time frame bias is telling us price is bearish. So we are only looking for sells. We are not looking for buys, and we maintain our bias the entire session. We don't ever switch up our bias. So we're only, because we're bearish, we're only looking for sells. This blue button right here at the top left that says buy, we're not interested in that for the day. The entire day, we're not looking at that, only looking for sells. So you're seeing price push down. Now, you notice here, right, with this wick, you see that price takes out this level. Now, once again, it's not ideal for this to happen. However, I understand that there's going to be some instances where price is going to have an aggressive move down and it's going to clear some liquidity. But the thing is that remember, this is the entire move. If I go on the 5-minute time frame, right? Make it easier for you to see, right? This is the push up from this low to this high. So it's not ideal that price went down and I have it right here. That price went down and went past, you know, the 60%, right? Like getting close, like 65% of the entire move. But it's giving you all the signs of it being extremely bearish. And remember, we still have this low, right? We still have this low that price can take. We still have this final low, which is the low of the day that price hasn't taken. We still have these lows that we can target. So because this is the low of the day and this is the most immediate target, right? I would personally close off. Well, I would look at the risk reward, right? Which this would be a 1 to 1.88. So me personally, I would close at the very least 50%, but pretty much 80% of my position, because this would be the low of the day. Everything else, like these lows and these lows, right? Those would be bonuses, right? So to me, the true move is from this high all the way down to this low for a 1.88 risk reward, right? And if you wanted to potentially increase your risk reward a little bit more, right, you can probably trade the 50% of this gap. So instead of taking the entry right there, you can take the entry right here or something, right? And then that can slightly improve your risk reward. But to me, this is how I like to take my trade, because I like to put a limit order. Now, I didn't manage this trade the best because on this day there were painters here doing maintenance, right? So I was kind of doing everything on a whim. But to me, this is clear as day. It's supposed to go down. It's supposed to go bearish. There's no question about it. So now we'll just watch to see what happens with price. Right. So price, you can see price makes another slight move down, which is normal as expected, right? It's still hovering around the same area. Then what happens? Price goes up and taps in to your entry. And then, price consolidates a little bit, taps into the fair value gap again. See, the thing with price is price has a tendency to return to the fair value gap because it's very magnetic, right? Price has a tendency to do that. And then after that, price makes its way down. So after like this candle right here, right after price close under this low, that's when I moved my stop loss to break even. And then I started taking aggressive partials because once again, there was maintenance happening in my house. And then at that point, right, that's when I moved my stop loss to break even. So I'm basically trading risk free, right? And I took a small partial at that low, but of course we have additional targets. So I'll just put this on a 5-minute time frame to kind of make everything a little easier to see, right? Then if we continue on, right, as you can see, price blasted through this low. So price cleared the low of the day. And remember, you're riding in risk free. So at this point, when price clears the low, you should most definitely be risk free. You should have your stop loss to break even and close at the very least 50, if not 80% of your position. For me, I would have closed 80% because that's almost a 1 to 2, right? Just take your wins where you get them. And then you can have, maybe a 10% runner. Sorry, you do a 10% runner at this low and then another 10% final close at that low, right? So after you've done that, right now you just let price ride out. And then now, as you can see, price goes down and it absolutely smashes our final target. But long story short, I did execute on this trade. Took the short right here, and then I took partials here, partials here, partials here, right? So it's the same idea. So the same way how we wait for liquidity to get taken, break of structure, and then you see the fair value gap that gets tapped into. These fair value gaps and the lows or the highs, the previous swing points, these remain, those are our targets, and we do the same thing on the way down, right? So you can see how powerful this strategy is, right? The final target is, if we do this again, right? Final target, give or take, is about a 1 to 4.6 risk to reward, right? So this is what I mean. When you have a strategy that works, right, and you are trading in alignment with the market, you get results like this. You can catch moves like this. And you see, this is why it's so powerful, because you are trading with the trend. You're not forcing moves. You're not going against it. And this is what price is doing, right? Like this phenomenon right here of price like purging this liquidity, this happens all the time. And this is why so many traders struggle, because think about the traders who believe in support and resistance, right? Because the traders who believe in support and resistance, they're going to look at this and say, oh, well, this is resistance, right? And so price shouldn't go above this level. So if I sell, I should put my stop loss right above this high. And then guess what? Price goes up and takes them out before the actual move, right? This is what price is always doing. Price is hunting liquidity, is going after gaps. So when you trade, you want to be trading with that same mentality. You want to be trading in alignment with the behavior and price. And until you understand this, until you understand the game that's being played, what's actually happening in the chart, you're going to continue getting burned, right? And it's only once you truly understand this that you can spot this when it's happening live. And then it's going to unfold like this, and you can catch trades like this. And everything that I've explained to you, it's logical. It makes sense. It's not my opinion. This is what's actually happening and unfolding in the marketplace, right? These targets of these lows, these are what's actually getting rated. These are logical targets. These aren't like random targets that people are saying, oh yeah, wherever I enter price, I'm gonna just take price for 1 to 3. You don't know if price wants to do a 1 to 3, right? But I'm taking price, I'm taking partials along the way to continue steadily compounding and growing my account, but also I'm taking price to logical levels, to levels that make sense, right? Because if price are targeting previous highs and lows, which you have your proof right here, right? You have your proof right here that price came and targeted previous highs and lows when price is bearish. Remember, think about market structure traders. Market structure traders, they'll see this move right here. They'll see this high get taken and they'll think price is bullish because price made a new high. But the reality is higher time frame bias was bearish. Price was bearish. And so price didn't clear this high to continue going higher. Price cleared this high so that it can actually go lower because we are bearish. So then after the high get taken, it made an aggressive push down and it left a massive gap in price, and price was magnetized to it. And so you just enter for a sell, and then look at that, you enter for a sell, you in drawdown for a couple minutes, I guess, and then price just immediately blast away and just begins to fly in your direction. And this is the only trade I needed to take for the day. So you're not only practicing good habits because you're managing your risk, but you're also only taking 1 to 2 trades max per day. This is one trade. So how can I blow an account if I'm only taking one trade? How can I overtrade if I'm only taking one trade? And this one trade right here made up for the 2 losses that I took the day before, right? Because of this massive move down. So you're seeing how even if you take 1 loss or 2 losses in a row, or even if you go on a slight little losing streak, these one moves right here, this one win, this can make up for all your losses and still put you in profit. So this is the power in the strategy. This is what the game that the market is actually playing. It is going after liquidity, hunting liquidity, and then pushing price where it wants to go, because you need to think of the market in terms of orders, right? If price is able to push up and clear this high, it is activating buy stops. So it is activating buy side liquidity. So buy orders are now being activated in the market with this move up, which is the perfect counter for the sells because price wants to go lower. So let me push up and activate the buys before I fill in the market with my sell orders. You're seeing how it makes sense, how orders are being paired, and this is why moves like that happen. So this happens over and over and over. And once again, even before I knew what I was actually doing, I was able to see these moves happen. So I know this is the game that's being played, and I'm showing this with you guys so that you can see with your own eyes and see that this is what's actually happening as well. So this is the trade recap for Tuesday, July 7th. And this is why I was still bearish. Even though I took a loss, 2 losses yesterday with my bearish bias and price continued going higher, price broke structure on the higher time frame. And it told me that it was bearish. Gave me the signs that it was bearish. So I showed up in the marketplace with a bearish bias. And that bias is what allowed me to basically catch this move right here, this aggressive move down where you enter and then immediately price just explodes in your direction, right? This is not random. This is not by accident. This is the game that's being played, right? And it's just, you will get burned by it until you learn it, because market structure can only take you so far. It's not all about market structure. When price hits 830, that's when the liquidity hunt begins, and price is targeting liquidity. It is going to disrespect and disobey all market structure rules and logic because it is after liquidity, is going after liquidity, and it wants to move in the direction that it wants to move, but not before it takes out liquidity. So this clip right here, this is the post recording of the trade recap of July 7th. I realized that Price didn't show the executions because I was in replay mode actively showing you guys the replay. But now, right, I realized that if I take off replay, it will actually show the execution. So this is what actually happened, right, to show you guys that I took this trade right in real time. So you can see price broke down lower, and then I entered right here on this bearish fair value gap after price left. Of course, a bearish fair value gap, right? A signal that price wants to push lower after it cleared, the buy side liquidity, right? Price came up, tapped it, and then broke lower. Um, so I entered right here, and then I started taking partials. So this trade happened while there were people doing maintenance in my place, right? I had painters here doing other things, so I was like, um, assisting them the entire time, and they had my attention. But when I took this trade, I basically had like limit orders placed to take partials along the way. So because I was not actively behind the screen, I was aggressively taking partials. But in hindsight, if I could, not have those distractions in place, I would have better managed the trade, and I would have taken lighter partials at the beginning, so then be able to take heavier partials along the way, right? Um, so yeah, if you can see, the first partial was taken under this low right here, which is, the first break of structure low that was formed, right? I took a partial right here, and then immediately after this low, after this candle closed under this low, that's when I moved my stop loss to break even. The other approach you can take, you can effectively move your stop loss to break even after like a larger swing was taken. So like for example, if this low got cleared, then you can move your stop loss to break even like a 15-minute low, like something bigger, because then at that point you wouldn't really expect price to reverse. Or the other approach is that you can wait to move your stop loss to break even towards the end of the session. So right here, this trade happened at 9:43. So you can consider moving your stop loss to break even after like 10, anywhere from like 10:30 to 11, because that's pretty much like the tail end of the session, and that's when most of the move happens, right? So you can have different, it all depends on your strategy on when you decide to move your stop loss to break even. I know that like with my strategy, it allows me to be aggressive with protecting my capital, but also sometimes, and as you will see later on with some of the other trade recaps, that sometimes moving your stop loss to break even, you might get knocked out early because this fair value gap is magnetic, right? Price has a tendency to tap in multiple times, as you can see, right? One tap, two tap, three tap, four taps, right? Price tapped this fair value gap several times before actually making the move. And so sometimes if you aggressively move your stop loss to break even, you might get taken out prematurely before the actual move. And thing to also remember is that if you're taking partials, you're not only growing your account, but you're also reducing your risk. So even if price reverses against you, you're taking less than a full one R to R loss, right? So it can end up being reduced to like a 50% loss, so it's not that big a deal, right? So I took my first partial right here when price closed on this low. Then as you can see with this bearish candle, that's when I took another partial, and that was the low of the entire day. So at this point, right, we got the first low taken, and then this was the low of the day. So at that point, in my opinion, you can certainly move your stop loss to break even, or you can just let your position run out and just trust the bias, trust that you are on the right side of the market, which when we determine the higher time frame bias, right, it is highly likely that we are on the right side of price, right, and of the direction. Then as you can see, price came down lower, and then I took another partial right here. So this third low right here ends up being this low. It was the low of New York session of yesterday, and then the final target was one of the larger lows from like the day before. And the reason why I had those as targets is because, we were bearish on price. And so those were pretty achievable targets for price to hit. If price were to go bearish, right, those were achievable targets. Now, that's not to say I'm holding my entire position all the way down there, right? Like, of course, this is a 1 to 4.61 risk reward, but I'm not holding my full position down there, because what you need to understand is that like the thing with trading is you don't need to be right all the time to be profitable. And when I say that, it's because if you're taking partials along the way, then even if price doesn't hit your final target, you still close most of your position. So you don't have to be fully right in order to be profitable, right? So you would take a partial here, and then me personally, like if price were to take out the low of the day by this point, I would certainly at the very least have 50% of my position closed at the very least. But let's look at the risk to reward ratio for this actually. the 1 to 87 risk reward. So at the very least, you should close off 50% of your position. If not, you should have it be closer to 75, 80, so that if price, goes against you or doesn't hit your other targets, you still close out most of your position, because no guarantee price is gonna continue going all the way down. But in this case, it did, right? So then you could continue taking out partial. When you get to this third partial down here, right, I would at the very least have 80 to 90% of my position closed if I'm planning to take it to this final target down there, which, as you can see, price did end up ultimately going down there before kind of reversing up a little bit. So you can see, like, this is the game that price plays, right? And here I'm showing you the executions to show you that I took this trade live when it happened.